alongside. I'll just like to briefly take their names and would request them to switch on their video and possibly wave. Amit Goyal, CEO, Samir Saran, Managing Partner, Sudarshan Sharma, Executive Director, and Akash Puri, Director International. Adapting to the new challenges, adapting to the new changes around us, we are very excited to launch and welcome you to the fourth edition of India Sotheby's Global Luxury Realty Conclave session titled Disruption as an Opportunity. We have market leaders from across the world who will discuss the new opportunities we must find to wisely plan your investment choices and real estate assets, given the impact of the greatest disruption the world has seen in our lifetime, this pandemic. I'll endeavor to moderate this session, keeping it as interactive as possible between the audience and the panelists. So please do send us your questions through the chat mode. We are hoping to keep this to about 60 minutes, give or take 5. The panel discussion to be for about 30 to 35 minutes and keep about 15 odd minutes for the questions and answers. Before we move ahead, I would like to very briefly talk about India Sotheby's International Realty. Set up in 2014 in India, we are a team of over 50 professionals from banking, luxury, hospitality, and of course, real estate business, bringing together decades of transaction advisory experience. Our global presence spans across 71 countries with 1,000 offices and 23,000 advisors on the ground. In the year 2019, Sotheby's delivered a global property sales volume of $114 billion. Our brand heritage, global network, and PropTech marketing platform makes us the largest, most unique luxury residential real estate advisor worldwide. I would now like to present a video demonstrating that it is only your home that has stood the true test of these unprecedented times. Okay, let's have the video. Okay, so like I was saying, your home has not only not borne any mark-to-market impact, but also come to your families and your protection. I'm sure it may have appreciated somewhat, at least mentally, if not on your balance sheet. I'm going to go around now and introduce our panelists for today. I'll start with my co-host, Ms. Natalie Mick, Global Vice President, EMEA region for Sotheby's International Realty. Over the past 20 years, Natalie has worked in Asia, Europe, and North America, covering asset management, capital markets, and investor relationships. Past employers include Swiss Life Asset Managers, Cushman and Wakefield, Wyndham Worldwide, and Sotheby's Realty in Switzerland, Qatar, and Morocco before she came back to the corporate office. Moving on to our panelists, Our first panelist for today is Ms. Riza Sebastian Karimpanal, President, Residential Business, Embassy Property Developments. At Embassy, Riza heads the residential business and is a member of the senior leadership team. Today, she oversees an ongoing portfolio valued at over $1 billion. Riza has been with the group for over 15 years and as a key contributor to the group's strategies, operations, and of course, decision making.
Thank you for having me, Ashwin.
Sorry?
Thank you for having me here.
Glad to have you with us, Riza. Our second panelist is Mr. Virendra Somvanshi, Managing Director and CEO, Motilal Oswal Private Wealth Management. He brings with him a rich multi-geography experience across India and overseas of more than 23 years in retail banking and private wealth management.
My pleasure to be here today, Ashwin. Thanks.
Thank you. Our third panelist is Mr. James Price, Vice President, Residential Development, Marketing and Sales, Four Seasons Hotels and Resorts. James has worked for Four Seasons Hotels and Resorts for 5 years, operating within their corporate residential team before he was 15 years with Knight Frank. Based in London, his role is to provide Four Seasons Hotel and Resort owners the best advice on producing the residential component of Four Seasons properties throughout their projects in EMEA and the APAC. Our fourth panelist for today is Mr. Chris Graham, Managing Director, Graham Associates, former Group Managing Director at the Hamptons International Real Estate Agency. Since 2005, Chris has worked on international branding, marketing, and lead generation campaigns, including some of the world's most prestigious residential and resort developments, picking up many industry awards along the way. Once again, I welcome you all to kickstart today's session. I would now like to hand over the floor to my co-host, Natalie. But before I do that, Natalie, I would like to ask you to give an overview of the kind of opportunities you are seeing in this adversity, wearing your regional cap as the EMEA head for Sotheby's, representing over 35 countries.
Thank you very much, Ashwin. Happy to address your question. Also, thank you for co-hosting this exciting event with you. The situation in the EMEA region is as diverse as the region is, with 35 countries. Each of the countries has their own interpretation and measures taken in regards to the pandemic. So some countries, such as Sweden, for instance, have never been in lockdown. Some other countries are still in lockdown with the airports shut and no international clients coming in. And that, of course, impacts business significantly. We're seeing in Central Europe now, all the offices are opening, the offices are slowly opening up again. Is Italy, Germany, France, but it's going to be a while until business is going back to normal. However, what we see is a lot of transaction, especially the ones that have been in the pipeline, are now actually closing, and that's great news. That's the case in Belgium, Finland, Italy, and United Kingdom. In terms of trends, what we see, new trends in the industry, two things. We see appetite for new developments. People like to buy new stock. As opposed to buying a resale apartment. They want to be the first ones moving into apartments and houses. And we see a lot of opportunistic buyers out there, basically people who are looking for deals. It's early days, so you cannot stereotype, I would say across the region, those are the two trends that we're seeing.
Great. So I'm going to hand it over to you, Natalie, to take it over with your panelists for today. And please do excuse me for, if I just decide to jump in at any point.
You should. It should be interactive and dynamic. Absolutely. So Riza, you are heading up the residential business of Embassy, a real estate developer based in Bangalore. So we're looking forward to hearing your views. First question for you, with the changes in the lifestyle post-COVID, are there any lifestyle changes in terms of the facilities in Embassy's developments? For instance, are you going to integrate medical facilities in the Four Seasons development or enlarging the lifts and corridors? Share some of your insights, please.
I think Firstly, a very warm welcome to all my viewers of this panel discussion. It's a very interesting topic. Disruption is always a very interesting topic to talk about. COVID-19, I think, has been a reminder to stay consistent on the things that we always try to incorporate as embassy into everything that we build. In many ways, I think we are already ahead of the curve on technology, on delivering amenities that residents could enjoy without leaving the building. But as a developer, I think we are conscious about adapting our projects as we design them to our buyers' needs at any given time. It is important, I would believe, to stay relevant, to stay responsive, and to stay conscious. Some of the design aspects, that we had been designing for way ahead of its time, and some of these projects are ready as well. And some of these key design aspects I would like to speak about is the fact that as a trend, we see that self-sustainable ecosystems, green buildings is the way to go. There's a lot of focus on natural ventilation, enhanced air quality, large open spaces. These are the kind of norms that people are looking for today. The other aspect is, of course, the hospitality-driven projects, anything which is managed, which provides an ease of living is a very strong value proposition as far as customers are concerned. There's a greater focus on wellness and well-being. So I would say today, health is the new wealth today. Designated workspaces, home offices, work from home, these are all things that people are looking for. There is a request for business centers at clubhouses, which is something that we had already planned for. Even low density projects, right? Everybody is talking about de-densification. How many people can you pack into one space? So this is something that we had been, practicing in practice for a very long time. Embassy Boulevard, for example, one of our projects has just 3 villas to 1 acre. These are things that we have done. Also the aspect of touchless technology, controlling elements with your voice, again, something that we had been doing. We have integrated Alexa into our mid-segment homes as well. So automation is very key. How can we reduce surface contacts? Even aspects like simple things like private elevator lobbies, for instance, are present in projects like, Embassy Lake Terraces, Embassy One. These are things that we have done, and we are seeing that these are holding our customers in good stead today.
Very interesting to hear about this concept of de-densification. So, and it's also interesting to see actually how Embassy has been so prompt and so quick in actually adjusting, the facilities to whatever, needs are out there. Riza, Embassy has been focusing on completing the developments of the past 1 to 2 years. And now I understand you have ready inventory of over 5,000 crore rupees. What is Embassy doing in this light of this disruption? How are your sales and marketing evolving? And at this point, would be great, James, if you could also comment just from a Four Seasons point of view.
I would correct those numbers. I think what we have, the available ready to move in inventory would be in the range of about 2.5 to 3. But ever since the lockdown was announced on the 24th of May, our singular focus has been to provide our residents and employees with the confidence and assurance that their health and safety has been our first priority. So we have contributed very effectively to the fight against COVID-19 across Bangalore. We have provided hydration stations for police, we've provided meals, we've provided dry rations. Several initiatives have been undertaken. At a sales and marketing core level, what we are seeing is that adapting to technology has been very key to maintain customer contact. During the quarantine, I would reflect what Nielsen research said, that worldwide, the digital consumption has almost increased by 60%. Zoom moved from 10 million users in December 2019 to 200 million in April 2020, right? So this has given brands, even brands like ours in real estate, a chance to reinvent ourselves, to generate engaging content, to offer a much better online experience with the help of new approaches, 3D, VR technology, chatbots, video call, users of influencers, blogs. All of this has been enabled to make sure that customers can engage with our brand by sitting in the comfort of our homes. So once exposed to digital content, I think that consumers typically obtain a very taste of convenience and excitement around it, and the appreciation for digital tools is only going to stay. Having said that, in real estate, I think an element of human interaction is extremely important. I don't think anybody is buying off plan, and it's very difficult to sell off plan. They would come and visit the projects at a time when it's convenient for them. So while they engage with us on calls and on webinars and things like that, it is important to combine an online and an offline experience to enable the sale. So what would have been the number of site visits would have been 4 to conclude, would now come down to 2, but that human interaction is still very, very important. And personalized, sensitive communication of care and service has been the norm of how we've run these last 2 months communication.
I couldn't agree more with you, Risa. And we're seeing exactly the same thing at Sotheby's International Realty. The human interaction, you cannot replace it. So pre-sales becomes very important. You can do virtual tours with a camera or something, but at the end of the day, the people want to see and feel the bricks and mortar. Yeah. Yeah.
So Risa, I'm just going to jump in there. I have a question for you. You know, you talked about this interesting concept of de-densification. My question to you is that is de-densification going to lead to any increase in prices, or is Embassy as a developer going to, you know, take that on?
Interestingly, Ashwin, I think de-densification is something that we've practiced at our projects throughout. Okay, it's not something that is new post-COVID. I mean, I think that's important, right? So even in a project like Embassy Springs, for example, which is 300 acres plus, we'll finally have less than 3,000 families living there. So this has been the norm, and this is how will we engage with these spaces is going to be extremely important. How do we plan for it? So at our projects, we talk about 30 apartments per acre. Now, these are unheard of, you know, in real estate terms, but our idea has always been about providing a return on lifestyle, and that's been extremely important along with the return on investment.
I like that return on lifestyle. I'm going to come back to it later. Back to you, Natalie.
I'd love to hear some views from James, how Four Seasons is adjusting in sales and marketing.
Well, I'll come to the sales and marketing element in a little bit, which really is to echo a lot of what Ree's just been saying. But I think the first thing is just in terms of, you know, what we've experienced over this period. Focus obviously has been on ensuring the safety and comfort of all Four Seasons guests, our homeowners, our employees, and there's been a huge collective effort, as you might imagine, between our corporate teams, but also, you know, at an individual property level, just to ensure that the property and the wider business is supported in the very best way. So really a lot of our attention has been focused around, you know, just maintaining what's there. We have, obviously the hotel sector's been hit particularly hard. So really the focus is around sort of maintaining, keeping the hearts beating, if you like, in those hotels. And we're starting now to see some of the hotels coming out of that and reopen, and some will take a little bit longer. On the residential side of the business, it's been a slightly different challenge. We have 44 residential properties or properties with residential elements, which are open and operating around the world now. And I think pretty much all of those, virtually all of those have remained open over this period. And that's because firstly, a lot of them are urban properties, they're primary homes for people. So this is where they live. So we're obviously sort of, you know, looking after those people as they live with us. And then there are also people who own vacation homes in some of our destination resorts that have chosen to go and stay there. And I think the reason that they've done that is that they feel that actually Four Seasons offers them a sort of a comfort blanket, if you like, that they know that the level of care and attention and safety that will be put in place will be second to none. So we've actually, on the residential side of things, been very, very busy in terms of, you know, maintaining those properties which are already open. On the pipeline side of it, and the marketing, I think that fundamentally, you know, the appeal of prime residential doesn't alter. I mean, people, if anything, in times like this, people come out of these situations and you see a flight to quality. People want to feel that they're getting the best property, and what's important to them. You know, it might change a little bit, but the key fundamentals don't change so much for them. I mean, I think, you know, previously with high net worths, apart from where the location was, the focus is all around security. That was one of the key things, and then the amenity program, etc. You started to see developers putting a lot in. So, you know, really trying to sort of overlay a lot of the kind of the amenities and the attractions for buyers. I don't think more is the case anymore. I think that buyers are now looking, as Reza said, to, you know, what developers are thinking about and doing, and operators are thinking about and doing in the sort of the health space, and, you know, how you're going to keep a clean environment, what measures you're putting in place. And we've been doing a lot of that, again, you know, through both the hotel part of our business and the residential part. And we've partnered, we have a collaboration which was announced a couple of weeks ago with Johns Hopkins International Medicine. And that's really about making sure that we think about as operators, what can we continue to do that creates a very physical, safe environment for people, but doesn't lose Four Seasons culture, which is all about the service, and people want that human touch. It just might look a little bit different now. So a lot of what we've been involving is yes, of course, you've got to have the materials, the kit. So, you know, it might change amenity packages in rooms for people, but it's also, you know, training it through the staff. It's making sure that everybody is fully aware of this, and it has a really deep-rooted impact, which obviously will serve the business in the long term. Just on the sort of residential marketing point, just to address that, again, as I said, I echo largely what Riza was saying, in that firstly, I think, you know, communication with our developers, I found, is everything. Some are at different stages. Some are on slowdown. Some are still, you know, about to go into market. They still want to carry through. So as long as we're communicating and understanding what the requirements are, we can help them sort of adjust to the situation. As I said, I don't think that the long-term appeal of residential changes. I just think the process of how people get there is a little bit altered in the short term. And I think Riza touched on a lot of developers starting to use virtual tools to enable the initial stages of that process and that interest from a buyer to move forward. I think that's great, but again, I agree, it doesn't really change the fact that ultimately people want to go and see this thing and touch it and feel it firsthand. So it helps the process, but I don't think it substantially changes how people make that final decision. And so I think, you know, what we do is just think about how we can support developers still, you know, with the messaging, what's important to buyers, and then when they do get to that sort of, you know, that point of sale with them, just ensuring that they have still got the right human elements on board to deliver. So I think that those kind of touch the various points you mentioned.
James, that's thank you very much, and also thank you for bringing up the point, health and safety first. You know, we're talking about trends and, you know, ways of how we can actually adjust to this crisis, but really at the end of the day, number one, health and safety for our guests, for our clients, and also for our employees. So we're following the same concepts, the same moral at Sotheby's International Realty. Riza, coming back to you, if I may be so blunt and ask you, who is actually buying right now? Who is buying during this post-pandemic time? Is it the millennials, Generation Y, or the baby boomers? Can you tell us what segment of the market is buying right now?
So traditionally, you know, in this last few years, everyone's been talking about the shared economy. That's been at the forefront. We've seen how Uber became the largest taxi company in the world, owns no taxis. Airbnb was the largest hotelier in the world, owns no hotels. So, you know, it's an interesting report of PwC, which said that 330 billion was the value of the global shared rental industry. However, I think this pandemic has made everyone realize the value of owning a home more than any other investment. And we are seeing how a simple thing like the owners of complexes enjoyed much more social security than even tenants at a residential complex. You know, so we are triggering a new wave of buying in today's market. I think the market is extremely conducive. I don't think customers today recognize the opportunity that is available to them. This is a point of maximum financial opportunity. We are seeing how simple things like, you know, interest rate, which has been at the top of the cards for most for buyers not to make that decision, is down by about 115 basis points, which has made a home loan much more attractive. We are seeing inquiries come in from the NRI market, people who realize were abroad in many countries and today realizing that their social security is much higher in their own country. How India has handled the pandemic is much better than most countries. Okay, and also the fact that the financial instruments have been completely down. The asset classes like stock and gold have been fluctuating. So we are seeing that real estate has not seen the volatility that financial instruments have seen.
I'm sure you're going to get a counter to that, Riza, and a strong counter to that from your co-panelist, Viren.
But there is, I mean, it's interesting, right? Because we are seeing that there is a demand for well-designed, ready-to-move-in projects. Real estate has offered the kind of stability when it comes to a very tangible asset that we can offer. You can mortgage it, you can refinance it, you can resell it. There are many options which are available, and inquiries are coming in. Are we seeing closures? We are seeing, I mean, in the last 2 weeks, we've seen a definite uptick in the closures, in value closures. So let's see how the market kind of pans out.
So, very quickly, one question from my side. What is your top pick from your embassy real estate residential development portfolio for your viewers today?
So firstly, as a city, I think Bangalore has performed exceptionally well. Not just for the way it's controlled the pandemic, but the fact that the city is home to about close to 400 multinationals. The city has been grossing the highest absorption volume consecutively for the last 10 years. So we go back to what real estate is all about. Is it location, location, location? I would say Bangalore has done phenomenally well. And Embassy's larger developments are based in Bangalore. The fact that we have spent the last 2 years completing our luxury projects, hence they're ready to move in assets today. They're the safest bet. There's no risk at all. You can just take your keys, move in. They have been designed to be future ready. So all these features that we're talking about, post pandemic, we are saying that they're already incorporated with these facilities. We also have a very strong asset management tool in place, which means that even if an NRI actually visits and buys our projects today, there's much better return on investment on them. We've been able to offer a return of almost 6%. That's the highest so far in Bangalore, unheard of in residential. Also, the fact that all our residences are well managed.
I can see that you are a hardcore salesperson and your list of reasons are not going to finish. So I'm going to have to stop you there.
Sure.
But I'm going to jump to our to Viren, our wealth specialist for today, and I'm going to ask him to give his views on how he feels about what you said about 3 minutes back on stock markets versus real estate. Viren, over to you, and sorry for the long wait.
How much time do I have to answer this question?
Well, you got to just make an impact and take the money home. That's what matters.
No, I think it's a very interesting question, right? And, obviously, whether it's real estate, stocks, bonds, or for that matter, gold, there is a space for, each asset class in clients' portfolios. However, I just want to share, if you look at what's happening in the last few years, the trends are very clear. There is, in India particularly, we are going through this whole trend of financialization of savings, right? If you look at the last 7 years data, the private consumption expenditure, which I would term as individuals, non-institutionals, in various forms of investments and expenditure. So the private consumption expenditure is actually growing at about close to, let's say, 7.7%. And this is, data I'm sharing about 2013 till now. And the income growth has been around 5.5%. So where is this 2% gap getting funded from? So one is clearly, the savings rate over the last 7 years has consistently come down. And, people have bought leverage. So banks and NBFCs are funding the, some part of the gap, and that is getting consumed. Now, why is the savings rate coming down is primarily because, and this is across segments, I'm saying that the large part of the savings traditionally used to go into residential houses, which over the last 4-5 years has actually been a bit muted. What this pandemic is going to do is clearly stop this whole personal consumption expenditure and tilt the balance. You will see a lot more savings coming in through, right? And the ones who are taking leverage are going to be very cautious because, as the business income and the salary incomes are getting impacted, you are going to be more cautious and conservative in taking loans. And the lenders are also going to be more cautious of whom they want to give the loans to, unless the balance sheets are strong and the incomes levels are strong. You'll see they've been also being cautious of whom to give. This will resultantly have some impact on the consumption and resultantly the GDP. But I think as far as real estate is concerned, many of our customers actually have bought also, in addition to they hold anyway large part of their portfolios into real estate, but we've seen a good trend of buying REITs and real estate funds also, right?
Sure.
However, one trend which is emerging clearly, and it's too early to say. However, many of our, HNI clients who have multiple houses and properties which are spread across, we are definitely looking as a trend to consolidate that and move into bigger houses. And I mean, work from home for many of us has become a reality in the last 2 months, and clearly looks to be the new normal as we move ahead. So, when schools are starting remotely, people have so in one family, if you have 4 or 5 people, 3 people also on different conference, you need 3 different rooms, and, so and so forth, the other accessories with it. So I think this whole need of moving into bigger houses will, eventually come. Right now, obviously, there are more number of clients who are wanting to sell their properties, and there is not enough demand there. The second
Sure.
trend which I'm seeing is that this whole security of my house psychologically is so important to feel at home always, whether you are in your own city or you're traveling. So vacation homes, so would again come in vogue, because would I want to stay in a hotel with many other people, or would I be more happier to be in my own vacation home, let's say in a place like Goa or another place? The trends will become much more clearer now, but many of our clients are showing inclination to get into vacation homes.
So that sounds good, Viren. I take home 2 points. One is consolidation of residential assets that HNIs hold and seeking larger areas for self stay, and two, emerging trend for buying vacation homes as well. I'm going to put a question to you on slightly unrelated on the resi front, but I want to ask you that on account of this pandemic, are you seeing a change in the need of the HNI families towards their overall estate planning and succession planning? Is that a trend that you are witnessing? Because our audience could really benefit from that.
Yeah, so history has always suggested that in any panic situation, the behavioral patterns change. Patience goes for a toss, and naturally people look for what is the further downside which can happen. As always in the past, even in this pandemic, when you look around, and there are cases of higher infections or that's going around, two big things which are in demand. In fact, just to share with you, in both April and May, as the 2 months, we probably had the highest demand ever for estate planning, both on the will side and on the structuring of the trust side. In fact, over the last 2.5 months, many of the clients have actually closed the structures in a hurry, because clearly they want to plan succession well, that if something were to happen to them, is the will in place, and is there a, and more importantly, some of the businesses which are leveraged and small might go through a difficult period this time. So I think the clear trend emerging is, how do I ring fence my assets?
Mm-hmm.
All these NCLT and IBC coming into vogue in a big way, how do I ring fence the whole asset and make my family and the companies and the businesses in my protective from that? So I think yes, we are seeing a huge surge, in fact, in demand proactively from clients on succession planning and estate planning. And like I said, last 2 months have been it just started. I think more clients are inquiring on that front.
Great. Over to you, Natalie. Sorry to just jump in there.
That's perfect. That's perfect. So let's move on to James. James, we've already heard from you about Four Seasons, how Four Seasons is dealing with the changing consumer behavior post-COVID. But you've also mentioned the residences, the branded residences. I would be very interested to hear whether this whole pandemic has actually reinforced the credibility of owning a branded real estate. We certainly see that as Sotheby's International Realty. We see actually brokers wanting to join our brand. So people looking for stable brands, where services are basically, can be trusted.
Sure. I mean, this is obviously a good question for Chris to look at as well. But I think, I would start that by saying, what does the brand do? Where is the brand really applying value to home ownership experience. And I think that people will always, from a design standpoint, people want space and they want service, and I think that is well understood. But you look at the whole branded sort of residential industry, really has become an industry. There's a lot of different brands at play doing different things. And, some of them offer a little bit more around the design space. Some of them really are an affinity with a particular kind of, brand in the market, and that drives the buyer's interest. I think what we try to do is make a point of difference with other brands, but also with specifically operator brands as well. Insofar as, it's about the long-term experience and really all the front of house service that people expect Four Seasons private residence to come with. Yes, we deliver that in spades. As I said, we're going to be evolving how we do that. I think Reza touched on some of the technology which is driving that experience, and certainly we like to feel we're at the cutting edge of that. We're developing fantastic digital platforms for our homeowners to be in constant contact with us, but delivered in a way that they have complete control about how they have that service curated for them. So there's that part, but I also think that people want to feel that that things are taken care of behind the scenes. And what Four Seasons does, different from most other operators, is really all of the property management behind the scenes that you don't see. So all the fundamentals of running homeowner associations, the capital planning. So we're not just looking after the people, we're looking after the properties. In pretty much most other cases, there is a third party which does that. We feel that by taking complete control, offering that, call it what you will, 360 service, we have full control over the environment and the experience that the homeowners will get. That's really where the value of the Four Seasons brand is. We're never going to dilute that. Right. And that's what homeowners come to rely on. So I think that, for us, the value is just in making sure that when people purchase a Four Seasons home, that's really the value proposition. So we work with the sales team, so, Reza's teams and others, to really try to help them understand that that's really the positioning of this, and that's where the fundamentals lie. The other point I just touched on, which came up, and I think about the, again, and maybe Chris can talk to this in a minute, but the way the brands look, I mean, we tend to have a pretty equal split in both existing and pipeline properties between our destination homes and our urban properties. I know a lot of the other brands, I think this came out in Chris's recent report, skew quite heavily towards an urban sort of, balance of properties now. Coming back to the point about, destination resort homes, which I think is increasingly significant. I think Viren just talked about this with Ashwin. People will have more ability, more flexibility to work from home. Families and the experience will become more important. So there will be a sort of shift in balance, I think, as to where people need to be and what's important to them. Time with family, the space that naturally comes with resort properties, they're obviously more spread out by dint of what they are. So this, has great appeal. So we feel pretty sort of, confident and happy that we've actually got a good split of our portfolio, which still has these sort of destination homes. Plus, the other thing that does, it gives opportunities for, rentals within that as well, which I think was mentioned. So our private retreats business is again, an increasingly significant part of the business, and it benefits the guests that stay there because they get to stay in these wonderful properties and have that Four Seasons service, but all the distancing and all the comfort that they could possibly want. It benefits the homeowners who, obviously enter into those rental programs. It benefits the properties, our property owners, the resort owners, and obviously us as a brand. So, things like that are increasingly significant, and we're always looking to make sure that, we're in the best locations, but we've also got a diversity of product, which means that, we can sort of, appeal to a pretty broad church of buyers ultimately.
So James, I'm just going to pause you there. Pardon me for that, but our friend Chris is feeling very left out. And
I tried to bring him in, Ashwin.
Chris, jumping on to you've been looking at doing a lot of studies assessing how these past disruptions, whether it is the global crisis or 9/11 or what have you, how they've impacted luxury real estate and what has been the path of recovery. Can you give the audience an overview of your findings as to which will be beneficial for today's global investor?
Certainly, Ashwin. I'm not sure how beneficial it's going to be because I've sort of looked at a range of reports from leading global institutions, and what became very clear to me is that with COVID-19, no one can confidently predict the severity of the impact, largely because there's no idea about how long it might last, nor if it's going to be V, U, W, or L shaped. All of the major pundits, the major houses and institutions who comment on these, who we all know very well, basically say that the longer it persists, the greater the chance of a more prolonged impact on real estate markets. The IMF actually put it pretty bluntly when they said, like in a war or a political crisis, there is continued severe uncertainty about the duration and intensity of the shock. So moving to real estate forecasters by and large are unwilling to be drawn on the short-term prospects of this. Most are talking about waiting really until towards the end of the year, Q3, before the extent of any damage can be meaningfully assessed. But picking up on your point about historic data, if we look back at past pandemics, such as the 1918 influenza or the 2003 SARS epidemic, the research shows that global economic activity fell very sharply during the epidemic, but very quickly reverts to normal once the epidemic has passed. Now, in terms of real estate, in the 2003 SARS pandemic, the fall in transaction volumes was immediate and severe, but it was temporary. And the volumes quickly bounced back towards their normal levels as soon as the pandemic was passed. And sure enough, as COVID-19 has spread and lockdown measures have been put in place, we've seen a similar dramatic collapse in transactions, up to 90% in some markets, and with prices falling slightly. But the evidence based on historical evidence suggests that this is only going to be short term. And this is kind of echoed on the real estate portals, because we've seen searches plummet over the duration of the pandemic. But as things get settled, we've seen them quickly bounce back towards their pre-pandemic levels. So that addresses the viral part of it. And going back to the first point I made about nobody being able to tell how long this is going to last, because with the COVID pandemic, and where it differs from the other pandemics, is that the great unknown factor is the extent of the global economic distress that is likely to come. The longer this goes on, the greater the impact, and correspondingly the impact on all industries, not just real estate. But on a positive note, when global investment markets are taking a hammering like we've seen, many experts believe that investors actually turn to real estate as a relatively stable asset class. We heard James say earlier, it's a flight to quality, and this is absolutely right. We would expect to see this. In terms of branded residences, which is one of my own specialisms, as looking at all of the benefits about why people are buying, James ran through a list. I distilled it down really to two key areas: convenience and confidence. And those are the two main motivations that draw people to this. This is all about lifestyle benefits and investment benefits. And of course, we know all about the lifestyle benefits. James very articulately outlined those. But let's also consider that with branded residents, there is evidence to suggest that they hold their capital value better. They sell faster, they sell at a premium, and they generate higher rental yields. So with all of that, buyers' opinions are not going to change. And with all of the existing benefits staying exactly the same, I really don't think there's going to be a major impact on branded residences. And if anything, given the instability in the market, they might actually benefit from this because of the confidence level area that I talked about. Now, moving back onto the COVID crisis, the one thing that buyers are aware of at the moment is that many developers of luxury projects are currently on the back foot a bit, and there are good deals to be negotiated. But the bottom line, I think, about all of this, and really what to take out, is that there is going to be little doubt that the impact on global real estate markets is going to be significant. But how significant, I think, is going to depend on the fundamentals in each market.
Got it. So I think we have just enough time to take the start of the questions. Natalie, would you want to just kick that off? Thank you.
No, I think we should start with the Q&As now. Absolutely. Yeah. Anybody wants to mention the questions, please, that we
We've got
have?
the questions on the, so we have a question here for Riza, and this one's like, Deepak Parekh and Uday Kotak predict a 25% fall in real estate prices. Comment.
So, I mean, yes, Mr. Deepak Parekh made that remark, but I think he went on to say later that, it was quoted out of context. Having said that, I think it's important for us to realize that most developers are not working with the kind of margins that we believe. Real estate had already been through a fair amount of crisis from the year 2016 when demonetization, there was RERA, there was GST. So we were just coming out. And 2020 was the year that we were, as residential real estate was supposed to come out of this crisis when COVID struck. Having said that, there are great deals that are available, but to the customer, I would say, please look out for developers who have a track record for quality, who have a commitment for execution. And these are who actually deliver on the specifications that have been promised to you, and pick up locations which are future ready. These should be the considerations. Please don't let it be a price driven decision alone.
And offer that return on lifestyle.
Yes.
So the next question out here is, and I would like you, James, as well as Riza, to give short answers. James, if you can go first. Are developers planning home office spaces within residential apartments, given this might be the way of life now, and is bigger apartment size a new trend in branded residences or group housing? What are your views globally? What do you see?
Yeah. I'm sure that developers will be looking to incorporate those elements into the interior design and layouts of units at the right level in the market. There's always a space pressure. So if you have the space within the design, if you've got the square footage that you can incorporate that, it's good to have. I mean, our prime residences tend to feature that anyway at the top end. I mean, by and large, sort of, the leading products often have studies already sort of put in. I think more the point is about people's concern about spacing will be more the common areas. And again, I think one of the things that we're quite fortunate with, both from a hotel and a residential standpoint, is that when you're going to walk into Four Seasons lobbies, you have got, a lot of space already there. That's already inherent within the designs of leading hotels and leading residential buildings, and segregated lobbies, separate elevators. So I think the common areas and how you flow through a building, corridors, things like that, these are probably where as much design energy will be focused, as well as, inside the unit. Is that okay, Ashwin? Short enough?
Yeah. Good. Riza, rather, let's have Chris's input on this. Chris, a quick one on this, because I have another question for Viren coming up, and a tough one.
Yeah, there's no doubt that traditionally buyers went down a laundry list of product features and specs and amenities, and this is all going to change as there's a rebalancing about the work-life family kind of environment. And it's interesting because there was an article in one of the big nationals here in the UK just a couple of weeks ago, actually, which actually said that a home office can add as much as 10% to the value of a property, and it may now make the difference in future between buying a house or not. And another study I read suggested that only about 25% of home workers actually have a dedicated office at home. So we're going to see a lot of changes, and there's a whole lot of issues around that to do with broadband speeds and Zoom-friendly environments. So you haven't got laundry hanging in the background, and how I think this was mentioned in your video actually about more amenities coming into the residences, of course. Gym, saunas, hobby rooms. A lot of people have discovered that they love basket weaving and painting now because of the
I think
pandemic.
all this is only telling me one thing, that the value of the house is going to go up.
Well, there's a very strong argument to suggest it will, but I think
I'm going to stop
you're
you there. I'm sorry for that, Chris, but I have a question for our panelist, Viren. Viren, what is, in your opinion, the right mix of real estate and financial assets in a portfolio? I'm putting you there on the spot now.
Okay. I wish there was something called as a ideal portfolio. We all would have been out of our jobs. The real answer is, frankly, since there is no unique ideal portfolio, it's very customized to individuals' risk appetite and its time horizon and what really is his investment objective, right? But at a very broad level, if you look at many Indians actually have been, investing into real assets, whether it is real estate traditionally. I think, like I was sharing with you, a large part of it is changing to financial assets, and then with some experience, there are regulatory drives, there are marketing campaigns over and above. So the clear trends which are emerging, like I shared with you in my earlier answer, is that yes, we see a lot more financialization of savings, but at a different class level. At, let's say, at the affordable housing segment, it's a very different trend. At an affluent ownership of houses for vacation homes, it's a very different trend. So clearly, I can't really pinpoint a right
Sure.
answer, right? But I think ownership of houses gives a lot more psychological, security in current timings. And I think that trend, like I was sharing with you, whether it is the mid segment or the high end segment, will be much more stronger, considering that you're very safe in your own house.
Thank you. I have a question, just in continuation with this as an emerging trend, and I would like to put this to Akash. So I have a question on, is there an emerging trend on immigration? Akash, I'm going to put this to you.
Yes. So, something that has come out again and again in our discussion today has been that, with flight to safety, flight to quality, flight to stability, healthcare systems to be good. And when one looks at an immigration, one is planning for the future and would want all of these, to fit in. And so there have been a lot of queries where, in countries, for example, in Europe, where there is, good health care, subsidized, healthcare, good legal facilities, and education which is available for children. And so there has been a huge demand in the last 2 to 3 months, about programs such as this that we could assist our clients with.
Any specific recommendations that you would like to just leave the audience behind before I move on to the next question?
Of course, it all depends on what they're looking for. Is it for tax benefit? If it's, if it's for family, if it's for education. But between Portugal seems to be a hot favorite because, it's less amount of investment to get a passport and the lowest amount of time. If then there are other options such as Cyprus, Malta, Greece, we have all those too. And if one was looking to get into the US, we've got options to get a passport from, Grenada in 3 months and move to the US within 9 months of that, and start on an E2 plan. So a lot of options are available on the table, and because of our network with our overseas offices, our connectivity, we're able to deliver this very easily for our clients.
Okay, I have a question, Riza, for you, which is, do you see a positive sentiment in the secondary market in the ready to move in properties? This is a question from one of our viewers on Facebook Live.
So yes, I would say more than secondary market, it is your ready to move in primary market, which is seeing the interest. That's also probably because, these are OC received projects, so there is no GST involved. And that's what we have seen. Ready to move in projects has been the way to go.
So that's where you see bulk of the demand coming in.
Okay.
Okay, I have another, earlier Riza mentioned a point of how off-plan investment projects are not finding favor in India. But I want to just contrast that with what the demand overseas is. And I'm going to very quickly give it to James and Akash to give their short opinion on whether off-plan projects are finding favor overseas or not. Off-plan meaning new development.
Yeah, I think that always whichever market you're in, new development properties tend to find favor because that's where the latest design is. That's where there's generally a higher specification. Often they're infill properties in good locations. So, that there is always an appeal to that. And just, being the first person to own that unit for a lot of people has that appeal. In terms of off-plan sales and when you do the sales, I think that varies a little bit by territory. There are certain territories, the States, for example, where often those will be done quite early on, and it's part of arranging, getting the finance to sort of build the thing out in terms of kind of holding reservations and stuff. Now, in other properties, in other countries rather, it often is there's a tension point that if you go too early, the buyers, you're never going to get that traction with the buyers because they need to see delivery. I think increasingly, I think it's a point Chris made earlier on, people need to see the delivery of what you're doing. So, there tends to be a tipping point that, maybe 2 years out in a lot of cases, you can start the sales at that point because the construction program is well underway. People can sort of see a little bit more and they can feel that it's not too far distance. But beyond that, it tends to be a bit more of a stretch to buyers. That's just what I found in previous sort of, roles.
Thank you, James. Akash, any last words on that before I take on the next question?
James very well described it, but for Indian buyers, off-plan is a very good option for two reasons specifically. One is because of the LRS limits. So they can, typically a development in, let's say, for example, in London takes 18 months to 24 months to complete, and they get enough time to be able to, pay along the while to be able to complete for that development. Secondly, most of the off-plans, for example, overseas are back-ended. So you pay a certain amount right in the beginning and you have ample time to collect the funds to be able to conclude it. And as what Natalie has said, that people are now looking for new homes, that is a perception because of what's happened with COVID. So this also increases the boost and the demand for off-plan properties.
I think it still comes down to the faith people have in the developer. And I think this is, when people look at properties, I would say almost start with who's selling this. Like anything, who's the vendor? Work that out, and then the rest of it follows. Really.
Absolutely, can't agree more on that, James. Viren, I have one last question for you, which is, how has this pandemic caused a change in terms of HNI clients looking at their wealth portfolios? I think they want your expert opinion on what to do with their wealth portfolios, and you got to give a specific answer and not, give a generic one.
No, in fact, this is exactly what, some of these crisis situations bring to the fore. So we have seen many of our clients actually revisiting the asset allocation, right? And clearly looking at it saying, okay, do I have the, risk appetite to withstand equity downfall? And I think this fantastic time to go back and revisit your investment objective, risk appetite, and say, okay, fine, if I can withstand, let's say a 50% fall from the $100 which I'm going to invest today. However, 3 to 5 years later, probably it'll yield the best returns within the asset class. That's the part of the money which should ideally go into equities. And when you're looking at conservation of capital, that part of the money should definitely go into the fixed income assets, right? Though and be ready about it so that you invest into safer assets and avoid credit risk there. And we've seen, by the way, many clients now actually wanting to diversify into gold and international funds as well. But that's part of the 5 to 10%, 15% of your portfolio, and that's more of a satellite allocation, anywhere between 5 to 15%. But a large part of the core allocation would continue to be into debt and equities.
Okay. On that international piece, I just have a question. Akash, how would, your international real estate fare with international financial investments? Any last words on that before we thank the audience and the panelists?
Thanks, Ashwin. I was itching to get into the conversation there. We have discovered certain developments and options for our clients which actually give financial instruments a run for their money overseas, because we have those options, for example, in student accommodation that give you guaranteed rental yield for a certain number of years. So not only is you're gaining from the currency appreciation that is happening, having invested overseas for about 2 to 3% every year, but if you have a guaranteed return of about 7% on the rental yield, plus a bit of appreciation of the asset that you bought, it really gives it's shoulder to shoulder, if not better, than investing in a financial instrument.
Okay. So I think we had one question from an audience who had raised his hand, but we're not being able to get the question here. But I think it's been a great session. We've already exceeded our time by a couple of minutes. Thank you so much for sparing the time for us today, and I hope all our attendees have been able to take away some good learnings from this session today. I heard some amazing words, whether it was new development, opportunistic buyers, the need to do estate planning. NRIs are buying back in India. Branded residences are holding up in value, both in terms of rental and capital. Emerging trends in migration. So lots of takeaways. In case of any questions not answered, your advisors, part of Sotheby's team, remain at your disposal. We will see you next on June 16th, 4:30 to 5:30 p.m. for our upcoming webinar titled The Purpose of Life. Please log on to our website, Global Luxury Realty Conclave.com. I would like to thank all my panelists and my co-host Natalie for their contribution and time today.
Thank you, Ashwin. Thank you
Thank
for
you.
inviting us.
So much.
Thank you.
Thank you.
Thank you, Ashwin.